Hello, welcome to the presentation, Financial Tips for College Students. I'm Lorna Sabo Wounded Head, and I work for SDSU Extension as the Family Resource Management Field Specialist. I primarily do community-based programming on the different topics about personal finances. And so today I'm here to share with you some tips that will help you to improve your financial well-being. So to get started, just wanted to explain to you that I approach finances by thinking about our overall well-being. To be healthy, we want to have a good balance in all areas of our well-being. And the image that's on the screen shows a perfect balance, shows but perfectly balanced with all areas of well-being. And this isn't necessarily possible at all times in our lives. The key about balancing our well being is to understand that if one area is out of balance, other areas of wellness are going to be impacted. Financial well being is one piece of the wellness wheel, and we needed to be able to take care of all areas of well being. Each area of the wheel are going to impact the other. For example, stress related to our finances could be impacting our physical and social well being. And for all areas of our well being, we need to recognize the cause of the imbalance, the impact that is having on us and your academic progress, and figure out how to work to make changes. Financial well being has nothing to do with your income level. It is defined as a sense of security and feeling as though you have enough money to meet all of your needs. It is about being in control of your day to day finances and having the financial freedom to make choices that allow you to enjoy your life. It is highly personal and does not relate to objective financial measures such as the score on a financial knowledge exam. Well-being is having financial security and financial freedom in both the present and the future. If you think about making decisions about your finances, like you make decisions about your health. So I have an example here that if you are diagnosed with an illness, what do you do? Most likely, you're going to first learn about that illness. You're going to make decisions about the treatment or the recovery, and then ask for advice. And you're going to do the same thing if your finances aren't in the best of health. You want to first develop your financial knowledge and then use that knowledge to make decisions based on your current situation, and then seek help and advice when and as needed. So this presentation today is going to go over six tips that will help you with your financial well-being. A budget or spending plan is at the center of all of those tips. Before I get started telling you about this information, I would like you to take some time to read the article Developing a Budget or Spending Plan. To access that article, just use the QR code and then just take a few minutes to read about the parts of a spending plan. Pause the recording while you are reading. All right, let's get started with 6 tips to improve your financial well-being. The article you just read explained how you can calculate your income and expenses. So first, let's go over income. Income is the money that you have available to spend, and this can be earned most likely from a job. It can be gifts, it can be savings, which is money that you maybe previously earned or were given, or your income could be money that you borrow. For college students, your income may be very irregular, or you might be relying on your savings in order to pay your monthly and weekly expenses. It is still important for you to track your income so that you know how much you have to work with. When you're starting college, you may not know exactly how much money you need to take care of yourself. So thinking about what's the cost of food, entertainment, transportation, or even socializing. If you're finding that you don't have enough income to cover your expenses, you may need to get a job, either increase your hours if you already have a job, or cut back on your spending. Step two of developing a spending plan is to calculate your expenses. In order to do this, track your spending to learn what your usual expenses are. And you can do this by reviewing your debit card or credit card statements, depending on which you use. Review your any cashless transactions that you have made to pay for those regular monthly expenses. Or you can, or well, you need to write it down. And so either do this with a pen or paper or an Excel file, or there are a lot of apps that you can be used to help with tracking your spending. Once you've gathered all the information, then you want to calculate how much you're spending for in the different expense categories. And so common expense categories are food, transportation, and housing. And you can see from the developing a budget or spending plan article that there are a number of other categories too. Not all of them you're going to use at this time. Once you have all that information recorded, then you want to take time to review it to figure out what you learned. So some things that you may learn from reviewing your tracking of expenses is how much you are spending for entertainment, how much you might be spending on food for going out to eat, food for groceries, depending on what your living situation is, if you are living on campus or if you, and then eating on campus and using your meal plans. Those are all things that you want to pay attention to. Are you maybe spending more money on things than you actually realized? Are are there some is there some spending that you could maybe scale back on, or even just be a little bit more conscious of? I'm going to give you an example of someone who I worked with where not paying attention to their spending was part of their financial concerns. And so this individual, um, by tracking their spending, was able to figure out really how much they were spending on restaurant food and as part of their entertainment. And so what I had this individual do was just track their income and looked at track their income and their expenses and just looked at how much they were spending in those different categories. This person realized that they had been overspending on restaurant food, but also recognized that the reason they went to restaurants was to socialize with their friends. And so instead of cutting out socializing with their friends and hanging out, this individual decided to cut back on going out and then started inviting people over to enjoy time together at their home, and was really surprised at how much money they were able to save by just making that small little change. Still getting to do the activities they wanted to do, but just making some changes. So, what's important about tracking your spending is that it helps you give you the information that you need in order to be able to make realistic decisions. If you might find after reviewing your spending that you have things in check and that you maybe don't have to make any changes, but know that I hope it gives you some confidence to realize that you're doing okay with your spending. It's always important to really review and figure out what is it that you've learned. Um, and flexible spending is often can be very eye-opening for individuals once the tracking is done. Sometimes the tracking can help you cut down on mindless spending, like just, grabbing a coffee because you are in the union, or going into the bookstore because you've got some time to kill and, buying um, a sweatshirt or some other item. Or even just grabbing maybe some snacks or a drink when you are going into the gas station to pay for your gas. So some of these are just habits that we have, and we don't realize that how much it is that we're spending. And this is really important if we need to maybe reduce how much money we're spending. So the article that you read about a budgeting and or setting up a budget or spending plan gives you an example of some templates that you can use to help develop that spending plan. The template may not fit you or your situation. Pretty much every type of expense is listed on that template. And so you need to decide what is makes the most sense for you. And you can be as detailed or as general as you would like, thinking about how you like to do things. But as I've already mentioned, remember you want to review the information. When you set up that first budget, it may feel really restrictive and may seem like you're not able to really do what it is that you want to do. But you need to make adjustments, and tracking your spending can help you figure out um, what it is that you normally do for your spending and help you just to have a little bit more sense of control and maybe setting up some boundaries for yourself. Tracking your spending and having a budget doesn't mean that you have to cut out those extras or cut out anything that, you know, that you maybe didn't plan for, but it really helps you see, do you have the money to spend on those things that you didn't plan for? So those are our first two tips. The next one leads into developing an emergency savings. And the spending plan template in the article that you read did have a line item for savings, so paying yourself first in the fixed expense section. Um, money in savings can help with those unexpected expenses that are going to happen because we can't plan ahead on some of those types of expenses. If you don't have an emergency savings, figuring out what steps you need to take to be able to start one is going to be very important. Having a spending plan and tracking your income and expenses can help you see where your money is available to save and how much you can save. And setting up an automatic deposits into a savings account or paying yourself first is really going to help you to meet that goal of establishing a savings account. Financial well-being involves not only your present situation, but also your future situation. And thinking about the future now can help you avoid financial shocks. It may not be possible to start saving for the future while you're in college, but thinking about those goals may influence your current spending. And you always want to make sure that you are setting realistic goals and making a plan to achieve those goals. Some ways that you can start setting up a savings account is any unexpected money that you receive. You can just save that and to start building that emergency savings. Things like tax refunds, gifts, or anything else that might be unexpected. And if your paycheck is more than usual, you can always save the difference. Tip number 4 is thinking about your student loans. The Student loans can be, once you graduate, can be an overwhelming expense and portion of your budget. So while you're in college, you want to stay on top of the balance of your student loans. For federal student loans, all of your information is located in your account in studentaid.gov. For private loans, You should, if you've saved the statements, whenever you've received a loan, you can review that information, or you can check your credit report, because all of your private loan information will be located there. Before you get ready to graduate, you want to know what those payments amount, how much the payment is going to be, and be able to select a payment plan and then be able to stick to it. If you want more information about student loan repayments, I've listed a URL for an article that has more information about student loan repayments. Whether you're just getting started in college or getting near the end and towards graduation, you want to be able to reduce the amount of money that you have to borrow. So always think or reduce the amount of money that you need to pay back. So think about borrowing only what you need and look for grants and scholarships and try to save some earnings for college expenses. If possible, pay any interest that is accruing while you're in college, because that will help to reduce your loan payment at the end. Next thing is to look at retirement planning. If you are getting close to graduating, um, knowing a little bit about retirement planning is important. If you are just getting started and graduation is a couple of years away, um, just tuck this information away to come back to later when you need it. But when you start a job, you want to take time to learn about the retirement plans that are provided for the employees. This is a wonderful benefit that for all of us when we have employer-sponsored retirement plans. So there are three different types of retirement plans. One is Social Security benefits, and this is I'll go into this a little bit more detail, but Social Security benefits, any job you have that where taxes are withheld, a portion of those taxes are going towards those benefits that you'll receive once you are at full retirement age for Social Security. And then there are employer-sponsored retirement plans. There are defined contribution and defined benefit plans. And then we have personal retirement plans, and these are going to be the IRAs or Roth IRAs. So for employer-sponsored retirement plans, a defined contribution plan is like 401ks, 403bs, or 457s. Defined contribution plans provide a lump sum at retirement, and they can either be contributory or non-contributory. Contributory plans are the money that is to fund the plan is provided by both the employer and the employee, and these are the most popular. Most have a matching option. So, for example, every $1 contributed by the employee could be matched by the employer up to 3% of their pay. And this contribution is going to vary from employee to employee. So these are some things that you want to look at and then ask more questions about to make sure you understand. But even if you are making a small contribution, in the end, with interest rates and or interest earned on those savings, it's going to be a nice benefit once you are ready to retire. And the non-contributory plans are the money for the plan is only contributed by the employer, and you as an employee don't have an option to add to that. Defined benefit plans, then they're also called pensions. These are pay a lifetime monthly payment to a retiree based on a predetermined formula. And so it's going to vary from organization to organization. Benefits are based on your years of service, the average pay in the designated number of years, and then a percentage. And this is considered guaranteed income at retirement. There are going to be rules for depending on your organization, um, in terms of like the amount of match, the amount that's required for contributions, and a number of other things, which you want to make sure that you understand and talk with your HR representative to get a better handle on any employer-sponsored plans. For personal retirement plans, these are funded by you, the individual, with annual contributions. Every year, there are contribution limits, and the contribution limits for 2024 and 25 are the same. If you're under the age of 50, you can contribute up to $7,000 annually. And if you're 50 or older, you can contribute up to $8,000 annually. And this is total contributions between all personal retirement plans. So the two different types of retirement plans are individual retirement plans or IRAs. Um, it's an account that holds investments. Um, you, as the contributor, needs to designate the type of investments within the IRA, and the contributions can be tax deductible, which helps to reduce your taxable income, which then you would pay tax at the time of disbursement. So when you withdraw that when you're in retirement. The Roth IRA, the contributions are not tax deductible. That means that you pay the tax upfront essentially on the funds that are contributed. And so then the funds in the account grow tax-free. When you withdraw those or when they're dispersed, you don't have to pay taxes on what you have contributed. And our last tip is also related to employee benefits. When you start a new job, you want to review the documents that you receive from your employer about the different types of benefits. What's listed on the screen are some average or kind of standard benefits: health insurance, disability, dental and vision, sick leave and annual leave, health savings accounts, and flexible spending accounts. The flexible spending accounts also include dependent care savings accounts, life insurance, and then the retirement savings, which I've already talked about. You want to talk with the human resources manager at your place of employment to get a better understanding of what the benefits are and what coverage you have. There may be a out-of-pocket cost for you for some of these benefits, or they may be included as a part of your salary. If you have any questions or want some more information about personal finances, you can go to our extension website and look for family finances. Actually, if you go to the website and click on wellness in the drop-down menu, you'll see personal finances. And that is where all of the information is that you will be looking for. So I've only given you 7 or 6 tips. You want to decide which of this information is most important to you and maybe most relevant at this time, thinking about what you might need in order to improve your financial well-being. Um, what's most important is that you're taking steps to secure your financial future and um, approaching them in a way where you are looking at simplifying your financial management so that it doesn't seem so overwhelming. But thinking back to if there's something that you need more information about, take the time to learn about that information. I hope that you have learned information that has increased your confidence in making financial decisions. Please take a few minutes to complete the evaluation. If you have any questions about your personal financial situation, please don't hesitate to contact me. My email was provided on the previous slides. So just use that QR code to complete the evaluation. All right. Thank you for taking time to listen to this presentation, and let me know if you have any questions.